I think we're going to start with a slide. If that doesn't pop up, we'll just start right into the Q&A. Okay, this was a slide that we took, I guess it was a poll, and the current downdraft in BTC, Bitcoin, and other digital assets will wet the industry. So test the hodlers, I guess is kind of obvious. But I want to lead that into my first question for the group. And the one thing I learned in Bloomberg Intelligence is we never talk about what the market did. Our job is a dicey operations trying to predict headlines and see where markets are going. So a year from now, Lule, we'll start with you. Where do you know, right now we're seeing a classic bust. We had a good boom. And typically a bust is the best foundation for markets long term. We've all seen some of that. Eric, you might have seen it more than I have. So let's start with you. What do you think the main narrative we'll be talking about in this space, macro, next year, this time?
So I think there are two if-then statements that will determine that outlook. So one is the if-then statement of where regulation lands, right? Does it figure out how to do an elegant approach to figuring out how to create leveling the playing field, or does it end up having sort of a chilling effect on new dollars coming in and innovation coming in? So that's one if-then statement. If it has an elegant approach that figures out how to speak both sides of the mouth, if you will, to make sure that we weed out the things that were not structurally right about the space, but also figure out how to foundationally create more innovation, then I think a year from now we will be in a good, as you said, what busts often do, which is a reinvention, right? A reinvention and a reinvigoration. So that's one. The second one is, you know, the last time, I'm from the perspective of the holders, right? So eToro is an investment platform in which regular retail investors get to have access to stocks, to crypto, and in the future other things. And we believe foundationally that individuals shouldn't be left out of the ownership equation, if you will. So from that lens, the other thing for me to look at is what happens to the resiliency and the stick-to-itiveness of an investor, of a holder. You know, in 08, we saw it had some scar tissue that it left, right? A lot of the holders, especially the millennial generation, felt a little bit nervous, and it was really this latest round that sort of brought them out of the woodworks. So I think the two things will be, will the holders have learned from their, you know, from the resiliency of the 08 experience? And then the second one is, where does regulation sit? Again, if the holders have learned that resiliency, I also think a year from now we're in a better place. We see at eToro, for example, that most of our customers actually said, I'm holding, right? And so that's going to be an interesting perspective to see if it lasts a year from now.
Kathleen?
Ooh, good question. And I think Lule has probably a better perspective on this as someone who owns, you know, an exchange or operates an exchange. I think what's a little bit different about this downturn for cryptocurrency markets as opposed to before is that obviously there was loose monetary policy all throughout the entire history of Bitcoin. And I think that's had obviously quite a bit of impact on the way it's been perceived and the way it's been regarded by the market. So the real question is, like, you know, how does it respond to any sort of contraction, like, right? And I don't think we know the answer to that, but I do think that's why, you know, this time is different. If it is different, that's probably going to be the case.
Eric, you can finish us off until we.
I agree with that. I won't go into regulation deeply, just because I think we'll get through the regulation. I think we've gotten the attention of regulators at this stage, and so and I think we've gotten the attention of the financial industry, and they see value in blockchain technology. And so I think a big part of thinking about what world looks like in a year is thinking about what are some of the new innovations that come after this cycle's over. Because I think this cycle's over, and I think it ended due to monetary policy. My opinion is that that we're in a period, probably a decade long, of material devaluation of the dollar versus hard assets, but I think that will apply to all major currencies. So it's not just a dollar play. It's I think we're in a period of monetary debasement as global economies reset their economies relative to the levels of debt that they have on. So once this monetary tightening cycle gives way, and markets are pricing that to start early next year, I think if it happens sooner, I think Bitcoin and a lot of these assets will start rallying in advance of that. But I think the really interesting things that we'll be talking about in the next year are some of the new innovations that are coming built on blockchain technology, as opposed to just what's the price of Bitcoin. I think it'll be higher, but but I think the innovation cycle coming is going to be very material.
Well, two key things there. Shaw, if you get a chance, can you show chart 4? The key lesson I learned being a former pit trader is don't underestimate innovation. Poof, that business is gone. It's all electronic. But you touched on dollar debasement versus hard asset. And if we can show that chart, I can talk on it. The key thing I want to piggyback on you and then go back to this group is what you see in this chart is that's crypto dollars as a percentage of total crypto assets. Almost 20% now. And it's not so much that, it's the trend. And it's one thing I like to point out, the most widely traded cryptos are the dollar, through tokens, which means Ethereum. And so when you say hard assets, when people say the dollar, and I like to point, well, if you show the long-term trend of the dollar, it always goes up versus other currencies. So where does that fall into play? Let's go with you and go back around where these aren't really, are they cryptocurrencies? Are they crypto assets? And the key question I like to ask is, what stops Bitcoin, for one, and the proliferation of crypto dollars from continuing to do what they've been doing? And that is absorbing other assets, like from equities and things. And like you mentioned, hard assets, like how about the dollar versus other currencies? And is Bitcoin going to be part of that space in the future?
A lot there. I would say, look, I think Bitcoin is here to stay. A number of these assets are here to stay. Most of them are not. So there'll be an awful lot of innovation, and which just by definition means most things will fail. I think when at least when I'm talking about monetary debasement, I'm talking about this an effort to create more dollars relative to the real economy, and that helps erode away the debts that we've accumulated over the last 30 years. So I think that process is a long-term process that is here to stay. So assets that are finite in nature should appreciate relative to dollars that are that are more plentiful over that period of time. So Bitcoin's one of them. Real estate, and so we've seen various assets increase in value, when priced in dollars, and so I think that that will continue. What the interesting thing, though, and you touched on it, was digital dollars. So I think that we are going to see all assets become tokenized, including currencies, the dominant currencies. And I don't think that they'll all necessarily be central bank digital currencies, but I think the dollar, in a world where everything becomes tokenized, the dollar is a major winner relative to other global currencies.
Well, that's what that slide's been showing. What stops that? Anything you want to add to that, Lule or Kathleen?
I mean, I think, first of all, it's a multifaceted issue. So I think that the one thread I would say is, one, I agree that the dollar wins because, by definition, cryptocurrencies are an innovation on top of something else sometimes. And so therefore, the dollar becomes the highway on which a lot of other currencies get built on. So I do think it wins in that sense. It becomes the choice of highway, if you will. But I do also think that there's an element of, when you think of currency, about what happens in a global economy, right? So when you're looking at countries where their local currency is not as trustworthy, regardless of what just happened in the valuation shifts in crypto today, it doesn't change the fact that in code we trust is still probably going to be more valuable to a lot of countries because they don't trust their own central governments, right, to be able to manage their monetary policies. And I think that is actually going to get more and further hardened. And when that happens, it becomes that much more plausible to think of cryptocurrencies are here to stay for sure, right? Yeah. And not just potentially Bitcoin, for that matter. So I think there's two factors to it. One, yes, I do think the dollar wins relative to everything else because it becomes the choice highway. But two, I think that these coins solve for other macro global currency issues.
Any thoughts on that one, Kathleen? Or
I hate to agree so much with my fellow panelists, but
we need to disagree and have some discourse here.
But yeah, I think if you look at the crypto markets, you can kind of think of them as two ways. One has basically been utility. You've got this censorship-resistant store of value arc that I think is here to stay, and then you've got sort of the more momentum-driven projects which are kind of slapped together with like scotch tape and multi-sig contracts that tend to go bust every now and again. So obviously like the market's been more fixated on the momentum plays, but I think like underneath all this there's like really a solid amount of utility and technology that does solve a fundamental problem. I think that having some
What's the fundamental problem?
Transferring value between you and someone else across the world without the use of or risk of an intermediary, which is a problem we've been trying to solve for a really long time.
Yeah.
So I tend not to bet against that. But yeah, I mean, I think the idea of programmatic money and the idea of kind of pushing the ball a little bit forward with the technology is the best case scenario for kind of seeing us our way out of this particular bear market in crypto.
So, Shaw, if you can show slide 3, I want to expound on what I do at BI. I'm a kind of an ex-trader, used to have the scars of trying to run money. Is I just say things. You do it. And I really respect that. I've learned my lessons. You get stopped out sometimes. You have real money getting stopped out. So let's expound on what I show you in this chart is there's this performance of cryptos. What I show you is this is just a performance of the Bloomberg Galaxy Crypto Index versus the NASDAQ in a declining volatility environment. And the narrative I've been using for quite a while, trying to quote people like you, is, well, what's your risk in the next 5-10 years for anybody who's running money of being exposed to crypto versus not being exposed to crypto? And Mike keeps saying, well, if you have 100 units to invest and you don't have 1 or 2 in crypto and it just keeps doing what you're doing, you could get fired. And 5 years ago, it was the opposite. Is that narrative fit into play with you at all? And maybe we should start with you, Eric, or is that completely off?
Well, we definitely didn't get into it because we thought we were going to get fired if we did it. We just saw.
Why did they go to another manager?
Maybe it would have the other way around. But no, we entered the market with a large institutional trade in November of 2020. Really driven by the macro backdrop of this monetary debasement theme.
Was there an inflection point that made you make that decision? Because that's a big decision.
Yeah, it was right around the election, and I think it was becoming more and more evident that that the scale of the stimulus was, which we had expected. We had expected whenever the next recession hit that there would be a very large fiscal stimulus that would be married with monetary policy, and so. And that would create this new period of monetary debasement. What we had underestimated was the sheer scale. So, U.S. ran 15% budget deficits really 2 years running, and so we were in kind of the middle stage of that coming the election, and so that was an opportune time to enter, and we had So anyway, we could go on for that for a long time, but look, I think
Oh, well, I get it. I appreciate it. Lule?
So I think your question was a 5-year horizon, right?
Well, minimum. I like to see sometimes 1 year is like, well, the speculator traders, well, forget it. But minimum 5 years, I would think, it really matters from a true asset manager.
Yeah.
Am I there at all, Eric? Or?
I mean, look, we got out of almost all of those early trades within 9 months.
So that was kind of your beta, though, for the bigger picture.
Yeah, I mean that there was I think
alpha,
it was a very highly convex opportunity. We thought that that most institutional investors didn't really understand how much security had improved in terms of custody and they underestimated a lot of the things that I think had improved in this space from 2017 on. So in a world where institutional investors were scrambling for convex bets to this monetary debasement theme, there just aren't that many.
Yeah.
And so that's a driver for a trade, but I think from our perspective, there's a lot more going on here, which is really related to the technology, and so we think that creates a 10+ year tailwind for this asset class. And as that technology gets adopted across the financial system, we think that these assets will, the quality assets, Bitcoin be one of them, Ethereum be one of them, they will appreciate materially.
Lule?
So I think, it's interesting. We have the luxury of having a lot of younger investors on our platform. So the majority of our investors are millennial or younger. And so, as you always know, time is your friend when it comes to investing, right? And so I think there's several things that drive the thesis of most of our customers. We don't necessarily manage ourselves, or we're a self-directed investing shop. And one of them, obviously, is time horizon. But the other two are really about a real appreciation because of the generation that we're dealing with, that there's a transformative nature here that's just beyond just their portfolio, right? That this is not just about their holdings and their portfolio, but taking part in a transformative thing that they believe in. So that's one. There's like a belief structure that's not just about the valuation of the asset.
So you're
class.
telling me millennials don't buy gold?
No, I'm not saying they're not buying gold, but I would bet that they're not buying gold at the same rate that they're buying crypto assets.
There we go.
And the third
money.
piece of it is one of diversification, right?
Yeah.
So a lot of them, they're not just buying crypto, they're also, because of the proliferation of fractional shares, are able to access equities at a level that they weren't able to do before. So there is also an appreciation of a diversification element of it as well that is in their calculus. But to me, sort of like, to look at this asset class only through the lens of, and no disrespect to my friend here, through an asset manager's lens is to miss the true big picture of what I think is going to be the power of the transformation of this asset class.
A quick question. Do you see millennials buying gold?
Not as, we don't have gold on our platform,
I
so
know,
I
but
can't,
when you look at your client base.
I don't have that
Okay.
insight. Yeah.
How about through a token?
Through a token, yes.
Yeah, there you
Yeah.
go.
But they buy all sorts of other things, right? Levered instruments. So they're not singular consumers of one thing or another. And again, I think that's a wise thing that they learned through these '08 crashes of like diversification matters. But that doesn't necessarily mean you're a fundamental investor only through the lens of investing, but through the lens of other things that factor. You see that with ESGs, right? This factor of like other things that influence my choices around investing that are not just about the thesis of the balance sheet and the income statement.
Well, transition, you're right away, Kathleen, but the lesson you learn early on in trading, it's like the first day in a casino, it's best to lose, because that means for an enduring career where you understand mitigation of risk. And hopefully some of the millennials didn't lose too much, but they know when they, as they get to mature, that, okay, I lost a little in cryptos, but look back 30 years from now, it helped me out. Kathleen, it's your turn. And
Yeah, I mean, I graduated from high school in 2008, so like right in the thick of this. And I think it's not so much like you get, you learn that institutions are more fickle and more feeble than you would have thought. I think we also relearned this during the pandemic. Like we really couldn't rely on a lot of the systems that we thought we could. So I think, my generation's pretty scarred.
in a good way, so because you're young. I mean, that's right, you have the diversification of time.
Yeah, but I do
Value
think
of time.
what's interesting about cryptocurrency is it is a cultural movement as much as it is, a way to look at, I guess, digital assets a little bit differently. I tend to agree with Eric's earlier comment that things are going to be like tokenized in some form, and a lot of assets are going to be tokenized in the near future. I think that's really cool and interesting. For me, like I'm not an asset manager, and I don't run an exchange. I work on a project, right? Like, and Tezos is a cryptocurrency. So what's been interesting to watch over the last few weeks is that there's been all this contagion with 3 Hours Capital, Luna, and some of these other folks, which is not just revealed kind of the way that the sort of last like big crypto bull run was conceived in the way it was managed, but also like the way people manage their treasury. So a lot of people had Luna in their treasury thinking it was a sure bet, for example. And so it's been an interesting, I guess, culling of the market, both from like a, I guess, more high macro and then also just on treasury management for these different projects.
So I have 2 questions. I want to start with you, Kathleen, and rope back, because I don't want to leave you on the end there. My question is, we're talking about a technology that basically didn't really exist a decade ago. And I want to ask you what you think, what's going to change in that the technologies we need to anticipate that might change this space? If like Eric, you mentioned, we all talk about tokenization. I was at the SALT conference in Bahamas, and I asked Anthony Scamuzzi, and he says, nothing stops that. I mean, I came from futures, and futures have really taken over a lot of trading. What is the technology we have to think about and really be concerned about and be aware of for the future that might alter our theses, and we should maybe for opportunities in this space?
Sure. I mean, so Tezos is a cryptocurrency that can upgrade itself, and it usually does so around every 3 to 4 months. Basically, there's a vote, and people add new technology to the platform or to the ecosystem. The thing that we're focused on now as kind of a community is scaling, because I think this doesn't really thrive if it doesn't scale. And we've seen a lot of the sort of crises or like kind of stress tests of the Ethereum network kind of come from like, increased popularity. And this stuff hasn't to date scaled really well in a decentralized fashion. So I think like in order for this stuff to really have teeth and to become more pervasive, you need better, you need better technological progress and the things that, kind of bring it up to the big leagues. And that's to date been like scaling has been a big issue.
Lule, you want to come back on that one, and we'll go back to end it with Eric and back to me, or how?
However your
Let's go for you.
strikes you.
Any thoughts?
So I think the question was again.
Well, it's trying to anticipate. Our job is to try to predict the next headline, right? That's dicey to do, but we're not journalists, right? And you run the money, and that's what you do. You have to try to predict the headline. So what is the technologies? I mean, tokenization to me is inevitable, just getting through the regulation, right? What is the next big thing to compete with Bitcoin, maybe, or to, are we going to stop using credit cards so much because we can use a stable coin and not have to, the merchant doesn't have to pay 2%. You know, what's really going to be the thing we should think about in the next 5 years that you see developing in this space that might really matter from an asset?
Yeah, you know what's so
appreciation or
fascinating
depreciation?
about this space, which is why I think even in the kitchen is really hot right now in our space, and I'm still staying. I believe in scar tissue. Scar tissue is a valuable thing in life, and what's so fascinating about this space, and I'm not trying to hedge this answer,
No, go wherever you
is
want.
that the use cases are literally like Matrix-like. They are infinitely possible in so many different directions. You want to create UBI, potentially, you know, we have, for instance, a UBI token called Good Dollar, right? You could start solving situations around like maybe the tokenization, maybe this technology could solve for that. You want to solve the transfer of money from the Philippines to here for all of the remittances in a safe way.
Mauer's
You
just
can
talking
solve for that.
Yeah.
You want to create local government interest in a particular zip code in Queens, and you want to figure out how to attract people by using tokenization, you can. I think the use cases are infinite, which is why it's so fascinating,
Yeah.
which is also why it's so important. One of our biggest problems in our society is that capital has not been distributed. It
Yeah.
still sits in the hands of the few. And what is so fascinating about this space is it has the power to pierce that veil.
Yes.
And one of the reasons I keep on talking and harping about regulation is that it is important, it is super important, that this innovation continues without, again, where the rules are set steady, but that the innovation keeps fostering, because there is no way to create equity in this world without having this kind of innovation have the infinite level of use cases that come for it. Now, to give you like the horse bet of like what's next year, I'm not good at that. But what's so fascinating to me, I know this for sure, this is transformative.
Yeah.
To the likes that we've not seen in history for a long time.
Having moved to Miami, where there's a good South American exposure, the joke is, well, it's the closest city to America. They get melting currencies. Americans, we have, like, Wences Caceres said it. He said, well, in this country, for us, money is like water is to a fish. And that's changing, though. But the rest of the world, oh, I mean, I can get exposure to the dollar through my phone or Bitcoin. Eric, I think it's,
Yeah, no, I think that'll be a really important part of it. So for us, as I mentioned, our entry into the space, at least institutionally, was due to a macro catalyst, and yet it pretty quickly realized a few things. So the first was that it became clear to us that all assets would eventually become tokenized, just because the trading and settlement rails are so superior to the incumbent systems. And so once you kind of have that realization, go, okay, every asset in the world will eventually be tokenized. We could argue, I'd be curious to hear what your thoughts are in terms of the timing of that. But our view is that even in the next few years, we're going to start seeing that accelerate. But in that world, what does the financial infrastructure look like? And we, as asset managers in the space, there were a number of things that we saw that either weren't yet built, or maybe they were built by people who didn't really understand finance and asset management very well. And then there were just some opportunities that looked like some of the biggest opportunities that I've seen in my career. And so we started building some of that infrastructure. So I think what you'll see, I won't go into all of it, but I think one of the most important things that you'll see, this is something that we're working on, is just taking the technology that first became manifest through DeFi and then applying it to incumbent assets, which aren't yet tokenized but will become tokenized, and doing it in a regulatory compliant way. I think that Jake Clayton, who is our one of our advisors, spoke earlier today about the importance of really not seeking to innovate through just leaving behind regulation, just completely criticizing incumbent regulation, but rather to work with the regulators and say, listen, these technologies actually can help you do your job better. They can help with customer protection. They can help with transparency. They can help with creating a more sound financial system. I mean, when you think about 2008, you think about March 2020, our financial system really kind of broke down. And so I think some of the blockchain technologies applied in the right way across the financial system will provide regulators and all types of financial counterparties with much greater transparency around what their counterparties own, for instance. And so we think that there's some great innovations that are coming. We hopefully will be part of it. I think we will. Yeah. But there'll be others as well.
Well, Eric threw out a question. We want to go there with that. Kathleen, you first. If you're as far as tokenization, I can tee it off. Eric, why don't you just? I'll tee it off a little bit. The most widely traded crypto assets are dollar tokens. Tether's one. USDC is number two. It's gaining because of the other issues, but it's just a fact. A lot of people don't know that. They think it's Bitcoin and Ethereum, but to me, that's the point: is what stops that. And Eric, you want to just refresh that question?
Look, that's a great example of an incumbent asset that has been tokenized. So stablecoin is really the killer app in this space right now. I know there's a lot of focus on other assets, but I would add as well that in a free market, stablecoin could have been denominated and dominated by the euro or the yen or the RMB or anything else, and it's 95% US dollar. So the dollar really wins in this space. But that's just an example of the first asset. I think the next big asset to get tokenized will be the US Treasury market.
Really?
Well,
how about equities?
Sorry, I think that the most important next asset. Okay. I'm not predicting that the Treasury market will get tokenized, but I think if you look at the foundational assets in the financial world, you have the dollar as a global reserve currency, and then you have the most important asset, which are treasuries. And so, and you've already tokenized this, and that's going to be brought into the regulatory system rapidly, I think. And then once you add treasuries to that, then it creates a forcing function across the whole financial system, so that everyone will need to have digital wallet. Every financial institution will have that. It means all their customers will have that, and that facilitates the much wider adoption of digital assets throughout the financial system. And then what will happen is every bank in the world will say, well, we have the infrastructure already. Why wouldn't we tokenize absolutely everything that we have? And so I think that's the kind of roughly speaking what the sequencing will look like. And I think that will happen over the next 10 years.
That's a very aggressive timeline, but I mean, we've already seen. I agree. So stablecoins are clearly the foundation of kind of putting the FI in DeFi. We've got the decentralization because that's the nature of the technology, and then a lot of this has been very recursive and very I've been calling DeFi Ouroboros finance for the last few years because it's all kind of tokens that exist to be traded on tokens that exist to be traded. There actually hasn't been FI. There's just sort of been de-gambling or something. But so what's interesting is if you tokenize these assets, and mind you, there's a lot of assets tokenized on the Tezos blockchain. That was one of the first big things after it launched was basically tokenizing Thai real estate or real estate in Thailand. They've gone through the sort of rigmarole with the Thai regulators and things like this. But it's great. It opens up a lot of financing opportunities to these people who might not otherwise be able to get these types of investors because you're using a blockchain instead of I guess technology that people are less acquainted with. I don't know. But I suppose to that point, to that end, seeing this marriage between a stablecoin financing all the things and tokenizing all the things, it's a pretty clear picture. If you see it.
Yeah, Lule, you any thoughts on that?
When you guys were talking, it's so clear to me that for the U.S., this is another extension of the U.S. dynastic sort of goals in the globe. Just, to me, this is why I'm this has to be seen as a strategic asset. This is unbelievable.
I think that's what we're getting at with Miss Gilder and Bill. They figured it out. Hey, let's not mess this up.
Yeah.
It's pretty good for us.
We might mess it up, but
hopefully not.
We should. Yeah.
Well, if you can, Shaw, can you show my chart one? I want to take us home with the most important thing a lot of people want from you is where do you think Bitcoin's going to be in a year? Higher, lower, or unchanged? I just show you a simple chart of I like to look at Bitcoin just dropped the most below its 100-week moving average ever on July 1st. Okay, it's a bull market. Do I want to buy or sell at those levels? I think if I'm thinking Eric running money, well, maybe I want to scale a little bit of that in. So why don't we just do final words? We have a minute, and whatever thoughts on that if you want, and any final words you want to have. Should we? How about Eric, and we'll
I'm happy.
finish with
I don't make price estimates. Just
Darn.
Well, I do that.
I know.
The reason is I try to stay objective.
I figured you'd say that, but I had to mess with you.
But what I will say is that I think at the highs there was all sorts of types of behaviors that you see at highs. A lot of euphoria. People very publicly borrowing money to buy Bitcoin and doing it in a loud way. And at the lows, you see lots of things break, and you see tight monetary policy. And we're seeing all those right now. We're not done hiking rates. I think Bitcoin will bottom before we complete the hiking cycle, and then I think we'll have a powerful up move after that. So we're in that zone where this is the accumulation zone. It doesn't, and
So that sounds bullish to me.
I think you're in terms of the market cadence, you're in that period of time where you're not supposed to be selling here, you're supposed to be buying,
So we're up to time, so Lule, and then Kathleen, let you take us home.
I mean, ditto for me as well, in the sense that, as sure as there's a summer, there's a winter, right? And as sure as there's a winter, there's a spring. And so I think a lot of times the vitriol of fear can keep, again, like my business is making sure individuals, not institutions, but individuals don't miss opportunities for wealth accumulation. So when downturns happen, it's just as important not to be scared off as when bubbles exist.
Don't be getting stopped out on the lows.
Yep.
Yeah, lesson I learned the hard way. Kathleen, take us home.
I think Bitcoin will be around in a year. I just don't know if we'll be in such a nice venue.